If you're like most people, your cash lives in a traditional bank account because that's what you've always done. It feels safe, it's familiar, and it technically pays interest. But safe and familiar can be quietly expensive when the yield is tiny and fees never sleep. Today, I'll show you a simple upgrade that acts like a checking account, keeps fees at zero, and can pay a meaningfully higher rate on cash. I'll explain how it works, what the insurance really covers, the catches to know, and the system I use so you can copy it in under an hour. Quick ask, want money explained in plain English? Tap subscribe. Back to it, what this is and what it isn't. A cash management account, or CMA, is technically a brokerage account that behaves like a bank account. In practice, you get a debit card, routing and account numbers, direct deposit, bill pay, mobile check deposit, ATM access, free wires at many brokers, and no monthly maintenance fees. If you looked only at the features, you'd say checking. Under the hood, it's a brokerage wrapper for cash. Using Fidelity's cash management account as a clear example, here's the core behavior. When you deposit money, Fidelity can auto-sweep that cash into a core you choose. Option 1 is a government money market mutual fund, often SPAXX, ultra-liquid, low volatility, aiming to maintain a stable $1 share price while paying a variable dividend that tracks short-term rates. Option 2 is an FDIC deposit sweep that places your cash across partner banks to extend FDIC insurance. The big difference? The government money market fund often pays a higher rate but is not FDIC insurance. It's a mutual fund covered by SIPC against broker failure, not market moves. The FDIC sweep has bank deposit insurance and typically a lower yield. Plain English, if you want higher yield on idle cash with daily liquidity, you'll likely choose the government money market option. If you manage large balances and your top priority is classic FDIC-style protection, the sweep is for you. And at Fidelity, the sweep can extend coverage well beyond $250,000 by spreading across multiple partner banks. Confirm the current cap on Fidelity's site. Historically, it's been several million. Either way, your spending is seamless. Swipe card, pay bill, or send a wire. The system pulls from the core automatically. No manual selling when your core is cash or the money market option. About yield. In the money market setup, you're not getting interest, you're getting a monthly dividend from short-term government and agency holdings. Functionally, it feels like interest, extra cash paid monthly and immediately available. The percentage floats with short-term rates, higher when rates are high, lower when rates are low. The variability is normal and market-driven. Why this matters? Many big bank checking accounts pay almost nothing. If you keep a few thousand to a few tens of thousands in cash for bills and emergencies, earning a few % on that idle cash can mean hundreds of dollars a year you weren't earning before. It won't make you rich, it will slow leaks. Safety. The number one question. Is a government money market fund safe if it's not FDIC? Funds like SPAXX target a stable $1 share price and invest primarily in U.S. government and government-backed instruments. Breaking the buck, dropping below $1, has been extremely rare. SIPC covers brokerage assets if the broker fails, up to stated limits, not market moves. While nothing is risk-free, government money market funds have been among the most conservative cash-like holdings in a brokerage. If you still want deposit insurance at the cash level, pick the FDIC sweep. You can switch cores later as priorities change. Perks that make this feel like an upgrade. First, ATM access. With Fidelity's CMA debit card, ATM fees at machines on major networks are reimbursed, credited back to you, typically same day.
If your local bank charges $3 to $5 for out-of-network, that alone can justify the switch. Second, travel. Fidelity's CMA debit card currently does not charge foreign transaction fees. That's rare for debit. Abroad, always decline dynamic currency conversion and choose to pay in the local currency. DCC often sneaks in a bad exchange rate. Quality of life if you invest at Fidelity. Cash in the CMA sits one click from your other Fidelity accounts, taxable brokerage, IRA, HSA, etc. Need to fund an IRA before the deadline? Move from CMA to IRA instantly. Mind limits and rules. Need to pay an estimated tax payment? Pay from CMA. Ready to buy an index fund today? The money's already inside the ecosystem. You remove multi-day bank transfer delays. My exact system, simple and durable. Bucket 1, bills plus buffer. Direct deposit lands in the CMA. I set bill pay for rent or mortgage, utilities, insurance, and subscriptions. I keep about 1 month of expenses plus a small cushion in the core so nothing bounces. Idle dollars here live in the government money market option, so they earn monthly dividends automatically. Bucket 2, dedicated goals. The CMA supports multiple cash accounts for free, so I open extra CMAs for big goals, taxes, travel, insurance premiums, property tax. Each gets an automatic transfer. My taxes account is the largest. Every time income hits, I peel off the estimated tax amount into that bucket. Funds sit in the money market core until I pay the IRS or state. If I overshoot, I move the extra straight into investing or the next goal. Bucket 3, investing, in a separate brokerage account. Yes, you can buy ETFs or stocks in the CMA, but I don't. Auto spend only pulls from cash and money market positions. It won't auto sell ETFs to cover your debit swipe. That defeats the acts like checking promise. So I invest in a standard Fidelity brokerage account next door and automate recurring buys there. CMA funds the brokerage invests. Clean lines, no settlement surprises. Insurance clarified. FDIC insures bank deposits, checking, savings, and CDs up to $250,000 per depositor per bank if the bank fails. The CMA's FDIC sweep can spread funds across partner banks to multiply coverage. Confirm the current limit on Fidelity's site. SIPC insures brokerage accounts up to $500,000 per customer, including $250,000 cash if the broker fails, not against market value changes. Money market stability comes from ultra-short government holdings in structure, not insurance on price. Choose the core that matches your priority. Catches and the fixes. No direct cash deposits.
If you frequently deposit paper cash, keep a $0 fee local checking account as a feeder. Deposit cash there, ACH to the CMA. Variable yields. When short-term rates fall, money market yields fall too. The point isn't to lock a number, it's to keep idle money working across cycles. Zelle and fintech quirks. Fidelity doesn't natively run Zelle for CMAs, and some apps connect via Finicity or need routing and account data. Venmo and Cash App link fine. Minor friction, solvable. No branch banking. If you need face-to-face weekly, a CMA won't scratch that itch. You do get mobile deposit, wires, and broad ATM access with reimbursements. Yield envy. Sometimes a fintech's headline rate tops a government money market by a few tenths, sometimes the reverse. For me, the combo of reliability, features, and one-click investing beats chasing 0.10%. 2 advanced value notes. State taxes. Some states exempt interest and dividends from U.S. government obligations from state income tax. Because government money market funds hold those instruments, a portion of their dividends may be state exempt. The percentage varies by year and state. Confirm in Fidelity's year-end tax supplement and your state rules. Travel. Since the CMA debit has no foreign transaction fee, it's great for ATM cash abroad. Decline DCC, choose local currency, and know a foreign ATM's owner surcharge, if any, is separate from Fidelity's reimbursed network fee. A 20-minute setup checklist. Open the CMA and pick your core, government money market for yield or FDIC sweep for deposit insurance priority. Add direct deposit. Turn on bill pay for fixed expenses. Create a second CMA named taxes or another goal, and auto-transfer each payday. Open a separate brokerage account. Set recurring investments there. Confirm ATM fee reimbursements and no FTF on the debit. Enable mobile check deposit and test a small inbound-outbound transfer. Keep a $0 fee local checking account if you need to ingest paper cash. Link your budgeting and aggregation apps. Try Plaid or Finicity options. Write a one-page cash policy. How much remains in bills, how much flows to goals, how much auto invests. Will a CMA by itself make you wealthy? No, investing does that. But it makes every cash dollar more useful, flexible like checking, pays like a serious savings tool when rates are healthy, plugs straight into your investing pipeline, and refunds ATM fees while traveling. When your cash system is this clean, you stop losing days to transfers and start gaining momentum. If this helped, tap subscribe. Next, tell me the friction point you want solved: travel cards, bill pay automation, or emergency fund math. Around here, we keep it simple. Design a plan you'll actually keep, then let that plan quietly do the heavy lifting.